Hello. Today we're going to introduce and explain the changes to the Municipal Pension Plan for police officers and firefighters in Group 5. The plan partners agreed to changes in late 2020. Those plan partners are the Government of BC, the Union of BC Municipalities, and the Municipal Employees Pension Committee. The Municipal Pension Plan Board of Trustees approved the plan rule amendments in March, and the changes take effect January 1st of 2022. Any service earned before January 1st of 2022 is not affected by the new rules. Let's look at what's changing, including how your pension is calculated, your contributions, and your choices at retirement. The value of your Municipal Pension Plan pension is based on a mathematical formula. Here is the formula before the changes. We will continue to use this formula for all service earned before January 1st of 2022. Built into this formula is a bridge benefit paid to you until age 65. If you retire before age 65, the calculation of your pension for all your pre-2022 service will be your years of service times your highest average salary, the best 5 years of your career, times 2.33%. Your pensionable service is the amount of actual time you worked contributing to the plan. At age 65, the bridge drops off, which is shown by the 0.7%, leaving 1.63%. But it's not 1.63% times your entire highest average salary. It's 1.63% times your highest average salary up to the YMPE, the year's maximum pensionable earnings. That's an amount Canada Pension uses to determine how much we contribute to the Canada Pension Plan. So if you retire with a highest average salary that is greater than the previous year's YMPE, we will take 1.63% times your highest average salary up to the YMPE plus 2.33% times your highest average salary over the YMPE times your pensionable service. That becomes your after 65 or lifetime pension for all your pre-2022 service. Starting January 1st of 2022, pension benefits on future years of service will have the lifetime benefit accrual rate of 2.12% of members' highest average salary for Group 5 members. This means the majority of Group 5 members will receive a higher lifetime pension. Only the very high income earning members will have a reduced benefit, but they will also have a reduced contribution rate. The pension formula for service earned on or after January 1st of 2022 includes a reduced bridge benefit accrual rate. Since the lifetime accrual rate is increasing to 2.12% on all salary for Group 5 members, the bridge benefit must be adjusted. The bridge accrual rate will decrease to 0.21% from 0.7% as of January 1st, 2022. So to recap, the bridge benefit for all service earned before January 1st of 2022 will be calculated at the previous rate of 0.7%. The bridge benefit for all service earned on or after January 1st of 2022 will be calculated at the new rate of 0.21%. The accrual rate for pensions before age 65 remains 2.33%. Another change to the Municipal Pension Plan for Group 5 members is there is now a single contribution rate of 11.12%. This includes a contribution to the Inflation Adjustment Account. If your salary is lower than the year's maximum pensionable earnings, you may have an increase in your contributions over the course of the year, because your previous contribution rate is lower than the new rate. However, under the new formula, you will also have an improved lifetime pension. If your salary is higher than the year's maximum pensionable earnings, you may have a decrease in your contributions over the course of a year, because your previous contribution rate is higher than the new rate. The decrease in your contributions means you might expect to see a little more take-home pay. Starting on July 12th, you can run estimates in the Personal Pension Estimator in My Account. If you have service in Group 1 and service in Group 2 or 5, a separate pension will be calculated for your public safety and non-public safety service. If you want to retire early, you may consider a temporary annuity. A temporary annuity allows you to take a monthly advance on your lifetime pension. This means you will receive additional income before age 65, but your lifetime pension will be permanently reduced as a result. The amount by which your pension is reduced is based on your age at retirement. The full temporary annuity option is equivalent to the maximum old age security amount available at the time you retire. The plan changes introduce two new options, a half and a quarter temporary annuity. The half and quarter options will be available January 1st of 2022. These smaller options result in a smaller reduction to your lifetime pension. The estimates for the new temporary annuity options will be available in the fall of 2021. Here are the three temporary annuity options. This shows the changes to the lifetime pension with the different temporary annuity options. Another change coming is your highest average salary will now be calculated from your best 4 years of earnings if you terminate employment on or after January 1st of 2022. By removing the lowest salary year from the 5-year calculation, the highest average salary will increase for most members. The highest average salary improvement applies to all service, not just service earned after January 1st of 2022. The normal form of pension has changed from a single life pension without a guarantee to a single life pension with a 10-year guarantee. With this change, you can receive a 10-year guarantee without having your pension reduced. This is only if you terminate your employment on or after January 1st of 2022. If you terminate before January 1st of 2022, the normal form of pension is still single life with no guarantee. One way to understand a guarantee on your pension is to think of it being similar to life insurance. With a 10-year guarantee, you are locking in a guarantee of 10 years of pension payment from the date of retirement. What that means is, if you die in the first 10 years of your pension, your beneficiaries would receive a payment for however long is left in the guarantee. For example, if you died 6 years after retirement, your beneficiaries would receive 4 years' worth of pension payments. The normal form applies to all service, not just post-2021 service. Members will also participate in the Group Contribution Rate Rebalancing Account, which is an account that helps protect against potential rate fluctuations. Group 5's share of surplus funds from the 2018 actuarial valuation will be used to fund the account. Things that aren't changing are your ability to buy service. There is still a 35-year cap on contributions, so once you have 35 years of pensionable service, you will no longer contribute to the plan. Your highest average salary may still increase based on your earnings after you've reached 35 years, so while you won't accrue more service after 35 years, you may still receive a benefit improvement from an increased highest average salary without needing to contribute. The Rule of 80 and reductions for early retirement are staying the same. Remember to visit the Municipal Pension Plan website for more details about the plan changes. And don't forget to sign up for My Account. Just click on the My Account link and select Let's Get You Registered. After that, it's just 4 steps to sign up. Once you are registered for My Account, you can use the Personalized Pension Estimator to estimate future pension payments. Members in Group 5 will be able to estimate their pensions for service earned on or after January 1st of 2022 in July of 2021. You can review a breakdown of your pensionable service, contributory service, and pensionable salary. View your member's benefit statement. View and/or update your personal information. Use the Purchase Cost Estimator to calculate the cost to buy service. Securely send and receive messages through the Message Center, and apply for your pension online.